Our financial and economic system seem to be going through a bit of a haywire mess at the moment, and it all seems to be a bit inexplicable. We had negative oil prices, we had negative real interest rates, we've got low unemployment, high inflation, we've got commodity prices booming and busting all over the place. It's all gone a bit bizarre, and like I said, it's all a bit inexplicable. And yet, there is an economic theory which explains all of this surprisingly well. There is also someone who's unusually good to explain this to us, and that is Thorsten Polleit. Thorsten, thanks very much for joining us.
Thank you very much, Nick, for having me on your show. It's a great pleasure to be here.
Now, the economic theory and the idea that I want to talk about is the crack-up boom, but it's going to take us a while to get there because people need to understand some basic economic ideas. But before that, I think we need to explain who you are and why all of this matters so much. And I think we'll take the latter one first so that people continue to watch. And I think that the idea of the crack-up boom explains all the bizarre economic ideas and phenomena and trends that we've seen over the past, I'd say, year and a half or so. And I think you're especially good to explain this to us because you've got the book in the background behind you, which originally explained this idea of the crack-up boom.
Well, first of all, it's related to the so-called Austrian School of Economics. It is an economic theory that has been developed towards the end of the 19th century in Vienna, Austria, and it has become a very important contribution to economic theory in general. And one important aspect within this theory is the so-called monetary business cycle theory, or the Austrian business cycle theory, as it is called. And this theory actually can explain how monetary crises develop, how they are triggered, where the origins are. And I think it's still very helpful to be informed about what this theory has to say.
Yeah, you can say that again, because that theory explained the 2008 crisis so well that it got me interested in Austrian economics and it started this whole thing. But just as the Austrian business cycle theory explains 2008 very well, I think it's the crack-up boom that's explaining very well what happens now and what is going to happen in the next year or so. But let's quickly cover as well why I've got you on and why I've been reading your work for so many years in order to understand these ideas. Thorsten Polleit, who are you?
Well, I'm an economist. I have been working in banking for many years. I'm now working for a precious metal trading firm, the largest in Europe. I'm also an investor, so I'm following what's happening in financial markets very closely. In particular, I'm interested in monetary theory, business cycle theory. And so when you asked me to come on your show, I was very happy to accept your invitation because you are pointing out, rightly so, that the international financial system has gotten into trouble. And the explanation for the developments you just pointed out, like the booms and busts and the speculative bubbles, negative interest rates, etc. The Austrian business cycle theory can explain what's happening out there. And you mentioned also this cracker boom issue. That is something the Austrian economist Ludwig von Mises pointed out in his book, in his very, very important book. Oh my God!
Human Action. It's behind you. It's just over your left shoulder.
Human Action. Yeah, I was thinking about the German, the original German book. It was called Nationalökonomie, Theorie des Handelns und Wirtschaftens, and in English it's of course Human Action, a treatise on economics. And in that book he explained the crack-up boom, and that was related, as I said, to the early 1920s in Germany, Weimar, where the central bank, the Reichsbank, kept issuing so much new money that people lost confidence in the currency. So the issue was then that the demand for money broke down, the supply of money was increased by the Reichsbank, and so you entered a period of hyperinflation in which at the end the German mark was basically destroyed. No one would accept this kind of money. And the crack-up boom is typically put forward to explain what happens if people lose their confidence in the official currency. So they basically try to get out of money holdings. They start exchanging their money balances against stocks, against housing, against gold, whatever. And so the demand for money collapses, and that is basically the end of the so-called unbacked paper or fiat money system.
So I would see the crack up boom as being the period before hyperinflation really takes hold. And some of the things that you just said there, such as people escaping money in favor of things like property and financial assets and real assets like the precious metals that you work with at Degussa, I think that's playing out right now in the news to some extent, isn't it?
Well, the unbacked paper money system, and I'm talking about the US dollars, euros, the Chinese renminbi, you name it, is inflationary. The money stock is getting increased chronically by the central bank, and people, of course, suffer losses in terms of the purchasing power of their money holdings. And lately, consumer prices have price increases have gone up, and people become aware of the erosion of the purchasing power of money. And of course, now the incentive is clearly there to reduce the money holdings or exchange their money holdings against, let's say, stocks or gold and even crypto units as a kind of protection against the inflationary losses. We could also call it inflation tax, which is getting imposed on people. And yes, that is clearly a reaction that people start realizing that they cannot trust in fiat currencies, that it doesn't preserve their wealth. And so I'm afraid we will see more of it.
I think that's why the crack up boom has the name that it does. It sort of looks and smells like a boom in asset prices, in property prices, share prices, and whatever else. But really, it's the economy cracking up and breaking.
Yeah, Nick, I think it's important to make a distinction between, let's say, a period of heightened inflation and a period of hyperinflation. For instance, look at Turkey. In Turkey, according to the official numbers, inflation has been around about 10% on average for the last 20 years. So the Turkish people live with an elevated rate of inflation. However, the Turkish lira, so far at least, hasn't broken down completely. People still use it for transaction purposes, but maybe not as a store of wealth. And what I'm saying is that inflation can be elevated. It does not have to lead directly to the collapse of the currency. The second, what I mentioned, the second phase is characterized by people getting the expectation that the central bank will increase the rate of money expansion. For instance, people expect the money supply to increase by 5% next year, by 7%, then by 10%, then by 12%. So it basically goes out of hand. The expectation that the money supply increase doesn't stop is actually the trigger point for hyperinflation to get going. And for instance, in Turkey, it hasn't started yet. I wouldn't say it hasn't started in Europe or the United States. It hasn't started yet, but clearly the risk is there if the central bank really, or people expect that the central bank won't stop increasing the money supply at ever greater rates of expansion.
I'd like to read you a quote from Ludwig von Mises, which takes on what happens next in a crack up boom and the two paths that things could go. And the quote is, "There is no means of avoiding the final collapse of a boom brought about by credit expansion. The alternative is only whether the crisis should come sooner, as a result of voluntary abandonment of further credit expansion, or later, as a final and total catastrophe of the currency system involved." Which way do you think things are going to go this time?
Yeah, that's a wonderful quote, Nick. It's a succinct description of what we are talking about. If people lose their confidence in the currency, it becomes very, very difficult for the monetary system. And can I get back to your question? Was
Which way do you think this is going to go? Will it be an abandonment of the currency, or will we voluntarily reimpose, monetary order as we did in, say, the 70s, for example?
Yeah. For now, I think that the interventions, government intervention in the monetary system as well in the economic system will increase. As you know, central banks have manipulated interest rates towards very low levels, and they prevent interest rates from spiking. And we were talking about this monetary business cycle theory. And one important aspect in turning the boom into a bust is that the interest rate, which has been artificially suppressed earlier, rises, and then the economic structure collapses, which has been brought about by the artificially lowering of interest rates. This mechanism is now no longer possible. For instance, in the United States, the US Fed is basically controlling all interest rates. It has basically put a safety net on the credit market, so investors know that the Fed will come in once interest rates would reach a level that is politically undesirable. And under these conditions, I think the monetary system can be prevented from collapsing, at least in the short term. Money production, the increase in the money supply will continue. I think inflation will be elevated. We won't return to inflation rates of, let's say, 2%. I think for this year and next year, on average, consumer price increase might be between 5 and 6 or 7% or even higher. And so people have to suffer from further losses in the purchasing power of money. At the same time, I think central banks are very aware. Maybe they have read Ludwig von Mises' crack up boom explanation in preventing the system to collapse. So there might be some restriction in terms of increasing the money supply going forward.
Now, I know you're German, Thorsten, and I originally am too, and history suggests that the Germans are the most inflation-sensitive people on the planet. So we're recording this a few days after the producer price index in Germany had inflation rates of 25% year over year. How much inflation are the Germans going to put up with this time? I think that's one of the key questions that we're going to have to answer over the next few years, and whether the Germans get sick of this inflation.
That's a very important question, and indeed, inflation has increased tremendously. Inflation, as far as consumer prices are concerned, run at 5% these days. Interest rate, as you know, are zero, so that means a negative real interest rate of minus 5% on time savings and demand deposits. Inflation is going to remain high. I think people still believe that it might be a temporary phenomenon, that inflation has gone up, and expect that inflation will come down a bit this year. I have doubts that it will. In the euro area, the European Central Bank has increased the money stock M3 by around about 20% since the end of 2019. And that has resulted in an enormous monetary overhang, as it is called. And this excess money is now, together with the negative price shocks in goods markets, is translating into rising prices across the board. It's not just consumer price inflation is rising, but also housing prices have increased very strongly. The latest data from autumn last year show that housing prices were up more than 13% year on year. So there is an inflation problem. People haven't realized how bad it is. The European Central Bank keeps interest rates at zero, and going forward, I think people have to expect that inflation will be high, will be elevated, and for all those money holders, this is pretty bad news.
Let's move on to solutions then. Around about 2015, I was visiting my mother in Austria, and I went to a presentation from a bank which featured you as the keynote speaker. And that was around about the time that I first started reading your work. And I was struck by the fact that we agreed on so much, and I was even able to predict some of the points you were going to make and some of the PowerPoint slides that were coming next, which delighted my mother at the time. So I know that we agree so much on what gold does, but I'll let you take away why gold is probably the best financial asset out there when it comes to battling these problems.
Well, gold has been money for thousands of years. Paper currencies have came and have gone. Gold has remained, and when you look at the physical characteristics of gold, you find it makes perfect money. It is scarce, it's homogeneous, it's transportable, mintable, durable. And it has other features that in the competition amongst various goods uh, make people opt for gold when they have the free choice of currency to choose their currency. And I think gold still is basically perfect money. And hopefully going forward, people realize that it is a very bad idea to have a state-run money production monopoly, as it is the case today, and that the solution to the inflation problem, as well to many other problems which plague our societies, is a free market, to allow for a free market in money. So that means basically that people have the free choice to choose the kind of money they would like to use for payment purposes, for storing wealth, etc. And where at the same time it is possible to offer people goods people voluntarily might keep as money. So a free market in money is the solution. And I think if we would allow for a free market of money, gold certainly is a candidate to become the ultimate means of payments in such a system. And as things are now, I think gold still is a very good store of value. If you look forward, one has to assume, to expect that the erosion of the purchasing power of the dollar, of the euro, of the Chinese renminbi, the Swiss franc will continue. And as I try to explain, I'm more concerned that the fiat money system, as it is, will remain in place a bit longer than many people expect, and I take that as bad news. And that inflation, the erosion of the purchasing power of money, is a key issue for all of us, and for especially for those who seek to preserve their financial wealth.
Something you wrote about recently, I think, is going to become incredibly important, and that was the distinction between socialism and neo-socialism, and this new brand of neo-socialism that is becoming ever more important and powerful in our political system. So, can you explain about that distinction that you made and why you think neo-socialism is going to be a new trend to worry about?
Yes, Nick, that was an article I recently published at the Ludwig von Mises Institute in the US, and it tries to explain what happens on a global scale. As you know, climate change, the coronavirus, have basically allowed the state, the governments, to increasingly interfere into the economic and social system. And as you know, there are plans for a great reset, for a great transformation of our economic and social system underway. And I try to find out where these ideas might be coming from. And I think they can be found in the theories of socialism. And of course, what we experience now is a new brand of socialism. The old style, Russian style socialism, the objective was to nationalize the means of production, to put production under a central authority. And the new brand of socialism is more a kind of interventionism, where the private property of the means of production remains in place, but the government, via taxation, regulation, legislation, increasingly restricts the scope of people using their private property and means of production. And yes, I think at the moment this idea of you can even call it globalism or neo-socialism is basically the guiding principle for many policies that are being implemented, not only in the United States of America but also in Europe. It's an ideological agenda that has become global.
What I found most interesting about the way you phrased things was that at least socialism is about trying to improve the lot of humanity, however flawed it may be, whereas neo-socialism seems to have different objectives. It seems to be about the environment and all the sorts of other arbitrary measures of whatever the elites seem to want. So I think this new brand's probably not as dangerous, but it's interesting how that shift has taken place. That it's not about helping out the welfare of the people anymore.
Yeah, I think it's important to point that out, that socialism cannot work. That is an economic insight Ludwig von Mises put forward in 1919. That was a scientific proof that socialism wouldn't work. And the old style socialism indeed still had, at least officially, the objective to improve the standard of living for the working class. The new neo-socialism has a very different agenda. They would like to preserve the planet. They would, and to do that, they would love people to consume less, to travel less, and they might wish for fewer people on the globe. So it's a rather sinister ideology, especially from an economic point of view, because if you try to suppress economic growth, then you start creating conflicts among people. Economic growth is not just an improvement in terms of the material well-being. It also helps to reduce interpersonal conflicts. Once the means of basically the available goods increase, it helps to prevent conflicts and also to if conflicts have emerged, to settle them.
Yeah, if the pie isn't growing, then people start to fight over the various slices of the pie instead. Thorsten, if people enjoyed this video, where can they find out more about you?
Well, you find me on the social media, on Twitter, on Facebook and LinkedIn, on Getter and Telegram. And also you find me on my website, thorstenpolleit.com.
Excellent. We'll put some links up below this video for people to check them out. Thorsten, thanks very much for joining us, and everyone at home, thank you very much for watching.
Thank you very much again for the invitation, Nick. All the best.